All right. So class, welcome to our today's session. And today we are going to talk about how to pass financial reporting. Remember, this is a reporting paper. We have a quantitative paper. We have the theory paper. This is a reporting paper. It falls under reporting. And if you are able to pass financial accounting, it is easy for you to pass what? Financial reporting round 1. It's easy for you to pass financial reporting round 1. Why am I saying this? In fact, if there is a paper that you are expected to pass round 1, it is financial report. If you compare the two, if I compare financial management, and financial reporting, if I compare the two, financial reporting ikaa kumeza uji baridi. If I compare the two, financial reporting ni kama kumeza uji baridi. What do you think? Let's talk. You know what I'm saying? True. Agreed. What about the rest? What do you think? If I compare the two, this one is the easiest. It is the easiest. You find that financial management has very many formulas. Once you get to topic number 4 of financial management, time value of money, up to where you have to go up to topic number 10, those are units with formulas. Imagine from topic number 4 to topic number 10, units with formulas. Topic 1, 2, 3 is theory, and then topic 11, 12, 13, and 14 is in fact, topic 11, I guess, is also a computation topic under financial management. We have very many formulas under financial management. But when it comes to our good unit here, which is financial reporting, it is the easiest for you to pass. Remember, this unit has 7 topics. So it is half what we have in the financial management. Financial management, we have 14 topics. 14 good topics. And that's why you find most of the students find it difficult to get to understand financial management. But for financial reporting, unless you have a problem, unless you did not dedicate your time to understand the concept under what? Financial reporting. So under the 7th topic, today we are going to look at the various topics which are examinable, 100%. You cannot miss that question. You cannot miss that topic. You cannot miss that topic in what? In your April exam. Which topic do you think is a mandatory for you to understand? Let me see whether you are a good forecaster or you have looked at the previous past paper. That is the way you do analysis. The novel telling us partnership, consolidated account, Agnes, group, you see, group account. If we say consolidated group account, the same, good cash flow. Group account. Now, if you look at all the past paper from when CASNEB started this course, or when they started offering the CASNEB exam, when they start offering, group consolidation, topics to note, all the subject that you need to cover first. Group consolidation. I'll talk something small about group consolidation and how you master group consolidation. Group consolidation is crucial topic for you. Tell me a past paper. Just mention one past paper from when we started testing this. I think it was 80s. Give me a past paper that does not have group account. Tell me one. If we peruse all those past papers, group consolidation is a must-have topic. unless sasa mkuwe unique in during April, and I cannot see that walete nini, walete vitu zingine na wasilete group consolidation. So as a student, you are supposed to equip yourself, with group consolidation. And there are some things that I said that you should be able to understand when it comes to group consolidation. Who can remember some of those things? If you have been following our classes, our lunch hour classes, who can remind me one of the items that we said you need to be conservant, or you need to understand the concept of those 5 things? Who can remind us one of the items that we need to understand? Let me say, those people who have been consistently attending our sessions. So far, I know you have your notes. People have forgotten. Group structure. That is the first thing that you need to understand when it comes to what? To group consolidation. So, mind you, if you don't know how to understand the group structure, please be ready to join us. In August. That is the May-August semester. Because assume we are having, or we usually have 5 questions. We are having 5 questions. Hakuna kuchagua. Tumekuja sasa, tumefika hapa. Kuna wakati pepa mingi za KASNEM kulikuwa kuchagua. Sijui siku hizi economics, are you still choosing? They were bringing 7 questions. I don't know whether during your time you have brought 7 questions. Economics 7. Most of the papers, they were giving at least a chance to choose. You can select, but now this time around you have to do what? You have to work. So 5 questions minus group question, because you don't know how to come up with the group structure. You are remaining with 4 questions, and group question carries 20 marks. It carries 20 marks. So your paper will be marked out of 80. I want somebody to tell me, between out of these 80 marks, how many marks do you think is theory? Out of the 80? I want to give you an overview of how you pass this paper. How many marks do you think is theory? The theory? Agnes telling us 30, 20, Langard 20. Remember, in most cases, examiner the structure of marking this paper, the structure of not even marking but setting, the structure of setting this paper is sometimes you find that examiner cannot get a question except group question and cash flow. He cannot get a question with 20 marks full, which is computation. 20 marks full, which is computation. Therefore, there will be a theory of like 4 marks and then computation of 16 marks. Therefore, you find that theory can take like 30 marks here. I'll show you a paper like 30 marks. So 30 marks theory. This theory 30 marks, one question has 20 marks of theory. So you need to understand the unit very well. You find that topic number one under financial reporting and analysis, we have accounting for assets and liabilities. Most of the theory come from topic number 1. Most of the theory, tafadhali. Most of the theories come from topic number 1, and that one goes with what? 20 marks. It's a question, a full question with 20 marks. And then I've told you that they are not able to get a question for 20 marks, computation. Therefore, like partnership, because partnership is also common, they can get a question which is worth 16 marks and then a theory of what? Of 4 marks. Therefore, adding up to 20. So when you combine all those small marks for the theory, you get that the theory will add up to 30 marks. Therefore, if you can work very well on your theory, tafadhali, kwa hii 30 marks, kwa hii 30 marks, an average student anaweza pata marks ngapi? I want you to give me that because you know yourself. Kama ni wewe, kulingana na venye unajipima, how many marks do you think you can get from the theory? Can I get the feedback from that end? How many marks do you think? 30 marks theory. How many marks? Ukiwa hujajifinya na hujafinya Kasneb. Nafinya Kasneb. How many marks do you think you can get for the theory out of 30? You're basing out of 30. Wali, I like that feedback. 20 from Wari. 25 Rangat, Lenovo, Asante. That one tells you that these students who are very confident, telling us that they are able to get more than a half. They are able to get more than a half theory. It is the probability of them passing this paper is high. The probability of them passing this paper is high. They have understood the concept of accounting. They have understood topic number one. Topic number one, accounting for asset and liability. So it's a challenge to you. If you have not understood the concept of accounting for asset and liability, I'm challenging you today to go and check. To go and check topic number one. Topic number one. Because if somebody gets, let's go with 20, the average of 20, the average of 20 marks. How many marks is this person remaining for him to get a pass? How many marks? Of course, it's 30. 30 marks. 30 marks. For this person to get a pass, it is 30 marks. This add up to 50. And this one we say that huyu amesaidiwa na Mungu. Kishafika hapo, nasema Mungu amekusaidia sana. There are those who usually get 49. There are those who usually get 49. Maybe 20 marks hapa sawa, hapa nayo anapata 29 marks hapa. Huyu mtu kitu yenye iko ni ya T, the system is used. It is the system which we use. The Excel. Less than 50 fail. Less than 50 fail. More than 50 pass. It is as simple as that. More than 50 equal or more than 50. Equal or more than 50 pass. I know people, you understand this. Equal or greater than 50. 50 marks. Hiyo ni pass. Less than 50. Less than huwa tunaiandika hivi. Less than 50 marks. This is a fail. Oh, when you see this one, ukiona hii fail, when you're looking at your results, when you see this one, you feel like collapsing. But at least when the day, as the days goes by, you continue gaining the strength, and then you join again. You join again. Now, we want to eliminate this one today. We want to eliminate this one today. We don't want you to do what? To be having less than 50. It's very painful. It's very painful. You have 49 and the pass mark is 50. Just remaining one mark for you to do what? To go to the other side. Now, I want to give you a secret. How do you obtain that one mark? Can you make sure that you understand group consolidation? Make sure that you understand cash flow statement. Cash flows. Cash flow, you know how to prepare. I know we have done questions on this. Like in our last session, we completed a question of cash flow. We completed a question of cash flow. For those people who are with, can you remember? Can you remember that we did a question, a full question of cash flow? Let me see those people we were with. I think we were together. Lenovo, yes, Agnes, we completed a full question. Therefore, if you have been missing our lunch hour session, you have missed a lot. But now, moving forward, can you make sure that you organize yourself? You organize yourself so that at least you're able to get something. So make sure that you understand how to prepare what? Cash flows. The other topic that you need to understand is conversion of partnership conversion of partnership into a limited company, into a limited company. This one into a limited company. This one is crucial. It's crucial. You need to understand the concept behind the conversion of what? Conversion of partnership into a limited company, where we want now to stop being called partners and we start being called managers, or the owners of what? Owners of the company. Owners of the company. This is what we do, and we have to get that. Then you need to understand how to prepare published financial statements. Wow. All the companies which are listed in the NSE, Nairobi Security Exchange, they are required by the law to prepare what? Published financial statement. Those statements that you find at the back of the newspaper, the financial statement. This company needs to prepare those financials. You should be in a position to prepare one. You should be in a position to prepare one. In your forthcoming exam, expect one. Published financial statement. It's guided by which standard? Which standard governs to prepare this? Somebody? Ukishajua hizo vitu, utakuwa on the safer side, because the standard guide you on how you should do it. Which standard? Chatuone watu wenye wako up to date. Standard of IAS 1. Asante James, yes. IAS 1, it tell us on how we should prepare what? Published financial statement. Do you know how you understand that? You can go and search the IAS 1 and see how it explains how the statement should be done. Remember, we said that it should have how many expenses? 5 expenses. Cost of sale, like that. Admin, distribution, like that. Finance cost, 5, and other expenses, like that. And that is all. Lakini kuna kitu nataka muelewe vizuri na mkumbuke kwamba niliwaambia kwamba it's always good to remember dealer in whatever that you are doing. When it comes to publish financial statement, you need to understand dealer, because you're going to be given a trial balance. So you need to understand what is debited, what is credited. And we say that this stand for drawing, expenses, assets. Those they have a debit balance. Then liability, equity, and revenue or sale, they have a credit balance. So anything on the credit side of the trial balance fall under what? Fall under this. Anything on the debit side, it will fall under there. And that will guide you on how to prepare what? Publish financial statement. So it is always good to carry something like this in exam. Na hubebi uko umeandika hapana, nabeba na kichwa. At the back of your mind, you carry that. Ukiandika, my friend, utarudishwa nyuma, utajipata foundation level. So these are 4 topic or 4 areas that you need to understand. Repeat again, dealer. Okay, pardon that statement. Okay, we're saying that this dealer, we have drawing, we have expenses, we also have assets. That fall under category of items which have a debit balance, So this is what he's saying. We just repeat it for the sake of those people who might not have gotten this clearly. So kuna hii kitu tunaita dealer. So these are drawings, expenses. These are assets. All these have a debit balance. They have a debit balance. Liabilities. This is equity. You know the equity items, and this is revenue or sales. Sometimes I usually add to student here accumulated depreciation. depreciation, accumulated depreciation. So all these, they have a credit balance. They have a credit balance. By the way, I don't know whether for those people we were with in our financial reporting lunch hour class, we had an account of accumulated depreciation. We had an account of accumulated depreciation. When we were looking at depreciation itself, we had PPE and we had accumulated depreciation. I cannot remember the values well, but I can remember that our balance brought down was on the credit side. Of course, my left side, this is debit. My right side, this is credit, debit, credit. Can you remember? Can you remember the balance that is brought down? The balance brought down is credited. Credited. Balance carried down. Balance carried down is debited, and then you get what? Your balance is hapa, and then maybe the balancing figure hapa itakuwa depreciation. Depreciation. If you remember that, this is what we mean. Accumulated depreciation has a credit balance. Credit balance. Then this PPE, is PPE an asset or liability? Where does it fall? It falls under asset, of course, non-current asset. Therefore, if we say that it has a debit balance, the debit balance is here. The balance brought down, it will be there. Then balance carried down will be on that side. And then whenever that we reduce our PPE is credited. Any reduction of our PPE will be credited. Any increase, anything that is increasing our PPE is done what? Is debited. Can somebody tell me, give me an example of an item or anything that is going to reduce our PPE? Somebody? Give me an item. Give me an item that you know it's going to reduce our PPE. And you know what to come, they are thinking outside the box. Disposal of an asset. Yes, if you sell, of course, in accounting, we say disposal, depreciation, reduction of value of the PPE, of any item of the PPE, reduction of that value. So this is, it will be here, depreciation, like hapo, disposal, hapo. There's something else also. Kuna kitu ingine inaweza fanyika pia. Kuna kitu ingine. Revaluation loss. Revaluation loss. Hizo zinakuja hapa. Valuation loss. Then tuko na this side, revaluation gain. Kama kuna gain, kuja hapa. If you purchase during the year, PP during the year, acquisition, naweza sema acquisition, unaweka hapo and then that is it. So wakati unataka kujua kama kulikuwa na purchase, unataka kujua kama kulikuwa na purchase, so examiner atakupatia gain, valuation gain. Hatuwezi kuwa na gain na loss at the same time. Anakupatia one of them. So the balancing figure hapa itakuwa acquisition. The balancing figure itakuwa acquisition. That means you acquired an item. That is it. So when we talk about the debit balance and credit balance, hiyo ndio tunamaanisha hivyo. So hapa tumesema kwamba you need to understand the group structure. You need to understand how you treat the intercompany sale. You need to understand how you treat the intercompany debt. You need to understand how you come up with the goodwill. You need to know when do you use the full goodwill method? When do you use the partial goodwill method? When? You need to understand all those. Very important. For example, when do we use a partial goodwill method or full goodwill method? Let's start with the full goodwill method. Somebody. Hizi ni vitu tumepitia. Kama umekuwa ukimiss our classes, tafadhali. Moving forward, when you see a link, tafadhali, hata kama ni alarm, have it. Those are things that we have been looking at during our lunch hour session. How, what help us to know the method to use when computing the goodwill? Somebody, if you have been with us from the start, the anatuambia fair value. Malizia statement yako. Fair value of NCI at fair value, NCI at fair value. So if the question has NCI at fair value, you use what? You use the full goodwill method. If it does not have, you use the partial goodwill method. And I know you know the procedure. The procedure is you take the purchase consideration, you add NCI, and then you subtract what? The net asset at fair value at the date of acquisition. Somebody to remind me, where do we get those net assets? That's another thing. Once you master that, you're good. It's nothing hard here. FR, hakuna. How do we get the fair value of net asset or net asset at fair value? Of course, at the date of acquisition. Where do we get them? Somebody, come on. Something that you have been doing and I've been repeating. The equity under equity section. Under equity section, where we have the ordinary share, share premium, retained earning, and then there is an item that is usually outside. Who can tell me the item that is usually outside? It's not in our what? It's not in our retained earning under our equity section. Under our equity section, they usually separate it. Retained earning iko pale. It is revaluation. The revaluation utapewa ikiwa kwa additional information, kwambia kwamba there was a certain item in the PPE, maybe an item of plant which fair value was greater than what? The carrying amount, and therefore we said when the fair value of that item is greater than the carrying amount, it is going to give us depreciation under charge. It is going to give us what? Depreciation under charge. Now, that revaluation gain is the one that we take where we have our net asset at fair value at the date of acquisition. Very, very important. Very, very important. Very, very important. Before we continue, please, I would like the 28 of us to confirm whether we are together up to that point. Are we really together up to that point? Are we together? Asante. Now, I've told you the secret between here. And don't forget that intercompany sales, they are not sales. They are not real sales. We usually eliminate them. Intercompany sale, eliminate them from group consolidation. Intercompany debt, you eliminate them. Intercompany debt, you eliminate them. Like that. We come to this one I cannot even mention. Cash flow tumeifanya sana. Kwa cash flow ndio utapata vitu kama hizi, by the way. Sana. Cash flow utapata vitu kama hizi. Very important. Very important. Cash flow utapata these accounts. You need to open such account so that you're able to know whether there was a gain or there was acquisition. There was acquisition or disposal. Examiner atupatia information. Now, under conversion, I'm going to find time. And we go through a question under cash flow in detail. Okay, Jonathan nataka tuguze kidogo. In fact, cash flow is the easiest. It is the easiest. So I'm going to find time and we look at what? And at a question under that. Then we have this. Let me show you a question here. Let me show you the question that or what you expect. You expect, I don't know. Can you see my sharing? So Jonathan, I'll mention something small regarding that. So I want you to see the paper. This is the paper that was just done last year. It was just done last year. So tukona hii. This was question number 1. Can you look at question number 1? Look at question number 1. How it was interesting. You see, with reference to International Financial Reporting Standard 6, you talk about something to do with mineral and resources. State the underlying principle for measuring measurement of exploration and search, blah, blah. International Financial Reporting Standard 15, revenue. All these, if you look at all these, they are under topic number 1. So the theory was under topic number 1. Then, the lion in the house, group consolidation, having 3 companies, meaning that we are having one of the company, which is parent, subsidiary, and also we have what? We have the associate. You are required to prepare that. You can see the marks allocated. You can see the marks allocated here. 10-10. Unachapa hiyo ukisonga. Haya, angalia question number 3. This was partnership. Si unaona? Unaona hawa partners. Unaona hiyo? Business purchase account, capital account, bank account, vendors account, like that. Was it partnership or branch? I think that was more of branch. Then this question number 4, cash flow. This is how cash flow question will come, like that. You expect the income statement and then the balance sheet and then some additional information and then you can see the number of marks. Hiyo unachafua yote ukisonga. Then question number 5, this is published financial statement. Very interesting. This is what I was telling you. And hata ni vizuri iko hapa. Can you look at what examiner gave this student? The following trial balance was extracted from the books of Kima Limited, a manufacturing company, as at 31st October 2023. Tell me whether our dealer is working here. Tell me whether our dealer is working. Equity. Does it has a debit or credit balance? Somebody chat me up. Equity, the equity section, under equity section, do we have debit or credit balance? Credit balance. Have they credited ordinary share? Have they credited share premium? You can see retained earning, revaluation that we are talking about. They have done so. And that is very interesting. Then check what you have as a production cost. Distribution cost, interest on loan. Those are expenses. And they are debited. So you need to be very, very smart here. So maybe to mention something on the cash flow. So for the cash flow, Jonathan, we have 2 methods. You can have the direct method and the indirect method. And in most cases, unless examiner specify, we usually use the indirect method. And for both methods, the format is almost the same. Only that under the first operating activity, under operating activity item, that is where the difference arises. Under operating cash flow from operating activity, that is where the difference arises. Because in the indirect method, ni kama tunaanza nyuma tukisonga. But for the direct method, we just start direct. You need to check the total receipt, whatever that we paid to our suppliers, total creditors, and then any other expense, you rate them under what? Under the operating activity, And then after that, you less tax, and then you less the interest. Any other thing that follows, it is the same as the indirect. So you have 3 activity here. The first activity is operating activity. And when you use the indirect method, you have to start with you can start with the profit before tax if it's available. If you have profit after tax, if the examiner gave you profit after tax, you can start with it as well. But remember to add back your tax so that at least it is taken back to profit before tax. Profit before tax. You add back under adjustment for non-cash item. You add back what? You add back your tax expense. Then you adjust other item. We call them dial GF. Dial GF. Depreciation. We have impairment, amortization. We also have gain on sale of asset, loss on sale of asset, and then we have finance costs. All those items, you have to adjust them. If it is a gain, you ask yourself, what happened to the gain? What happened to the gain for us to arrive to that profit? Jonathan, what happened to the gain? Is it added or subtracted? For us to arrive to that profit that we are adjusting, what happened in the income statement? Gain. Is it added or subtracted in the income statement? Gain. It is added. Gain is added. And therefore, when it comes to cash flow adjustment for non-cash item, we usually do what? We usually subtract it. If depreciation is subtracted in the income statement, when we come to adjust our profit, we add it back. Remember, we want the profit to remain the same, the actual. We want to take the profit to its actual position. Take the profit to its actual position. So any item that was subtracted, we are adding, but it must fall under dial G. It must fall under here. It must fall under dial GF. It must be one of these: depreciation, impairment, amortization. Remember, these are reduction of value of this item. Amortization, loss, gain, either on sale or on disposal. Then finance cost. So I can see here I have just one gain. So this gain will be subtracted. All these other things, hizi zingine huwa zinatolewa, so they'll be added like that. Even loss would be added like that. Jonathan, are we together? And then from there, you less your tax. You go to changes in working capital. Those 3 or 4. You do your things. You get to less tax paid and then less interest. After that, you go to the investment activity, cash flow from investing activity. Then you have your items there. And we say that non-current asset are the one which guide us on the investment. At the investment, we are using the non-current item. Using a non-current item. Kama hii. Kama your acquisition sasa. If we acquired, remember, under cash flow, we are looking at movement of cash. If we acquire, what happened to the cash? If we acquire an item, our cash reduced. Therefore, we put that as an outflow into bracket. Then after that, you go to the other part, which is cash flow from financing activity. Under financing activity, we have issue of loan. Maybe if you borrowed loan, if you issued ordinary share, if there was an increase in share premium, dividend paid, like that. And we said for the dividend paid, you get it from, we mentioned this, it is important. For you to get the dividend paid, it's simple to know that dividend paid, so you compute retained earning. Wakati hujapewa dividend, you compute retain, you have what? Retained earning account. Come up with the retained earning account. Retained earning account. This is important for you. Assume you've been given 2 years, 2021 and 2022. So tell me, between the 2 years, which will be the year for the brought downs? You know, here I have year for the brought down and year for the carried down. Between the two, which will be the year for the brought down? Na hiyo ni muhimu sana, 2021. Yeah, 2021 will be the year for the brought down. So this is 2000. This is 2022, which is 4,000. Now I don't know, is it really, will it really give us what we expect? Let me put it as 1,500, and then we compute the profit for the year. We compute the profit for the year. Profit for the year in the income statement, of course. Profit for the year. Tuseme maybe ilikuwa kitu kama 300. The profit for the year was 300. Now, to obtain the dividend that was paid, first of all, tell me, retained earning, does it have a debit balance or a credit balance? Kitu muhimu sana kwa accountant kujua. Every accountant needs to understand the concept. Does it have debit balance or credit balance? Kila wakati ukisahau enda kwa dira haraka haraka. Haraka haraka enda kwa dira. Kwa dira. So it fall under this. It is under this. Under equity. Under equity. So it has a credit balance. So balance that is brought down is this one, 2,000. Balance brought down is 2,000. Balance carried down ni ngapi? 1,500. Remember, we are looking at dividend paid. Somebody to tell me where I take my 300 profit for the year. Remember, still, this is now the profit for the year that we have computed. We got from the income statement. Where do we take? Is it credited or debited? Credited, exactly. Income statement inakuja kutusaidia 300, and then we have balanced the account 2,300, 2,300, and now bank. Whatever that go to the bank account is what that was paid, and it is the dividend paid. As simple as that. As simple as that. So you can get your difference. The difference between this and this is your dividend paid. You know, for tax, unaifanya hivi. Tax pia kuna ile ya income statement unaletaga hapa. Interest pia, if you want to open an interest account, still kuna income statement. And you go kwa income statement. You do the same. These are liability, equity, and what? Liabilities. Equity and liability, and they are treated this way. They have a credit balance. A credit balance. So class, my time is up. Can see it's 1:51. I was supposed to end at exactly 1:50, and I would like to wind our session at that point, unless there's a burning question. But I hope you have enjoyed our session today. I hope it was educative and you have gained something. Any question as we wind our session? Any question? Right. So feel free to leave. Thank you so much for having time to attend our today's session. We really appreciate it. We know that it's a great sacrifice for you to find such a time and attend our session. Otherwise, I have been your lecturer, Stephen Asante. Don't forget to enroll with us and to call our customer care through 0719 525,000. 525,000. We have an offer that is ending today. If you are taking, you pay that 200, and if you are just normal student, you can pay Kenya shilling 4,000 per unit for the remaining part of the semester, and you'll be in a position to get the previous recording. Don't forget to contact our customer care through that number. You can as well contact them using this number, alternatively 0793 555,000. 555,000. Thank you so much. May you all have a blessed afternoon and a happy weekend. Asante. Goodbye.